Hi, this is PR Sundar. Welcome to Pre-Market Report sponsored by Delta.exchange. So yesterday I told you it depends upon the US market. The Indian markets will open today. US markets, so there are 3 or 4 data every month. One has to be very careful. One is the monthly jobs data. Number 2 is the consumer price inflation data. The third is personal consumption expenditure data, and then producer price index data. Producer price index data, consumer inflation data, and personal consumption expenditure, they all related to inflation. This monthly jobs data. So these days, US markets tend to move very violently. After the monthly jobs data, S&P 500 has fallen more than 3%. And now, after the consumer inflation data, S&P 500 shot up more than 3%. So that means more than 6% swing. Yesterday, on top of this consumer inflation data, corporate results. So yesterday was the first day some major companies, many banks, Wells Fargo, Morgan Stanley, Citigroup, so many top banks came out with results. I think those results were very good. So because of that also, the market shot up. So since US markets are doing very well, so most Asian markets are doing very well, and the GIFT Nifty indicating about 100-120 point gap up. The problem for us, based on the global cues, we are doing gap up, and then at some point of time, FIAs come and sell, and the markets continue to fall. So as I told you, the global cues are looking very good now, and today market will be definitely very jittery. That's because Reliance Industries, Infosys, and Axis Bank. So these 3 stocks will be very much in focus today because tomorrow's result, today evening result, and of which Infosys is trading closer to all-time high. So which means that the people are expecting good results from Infosys. In case if the result is bad, that stock will fall drastically. And Axis Bank and Reliance both are down more than 25-30% fall in the last few months. So because of that, if those 2 stocks, if they come out with good results, there will be a huge short covering. So expecting this, yesterday I've taken a small bet and I went long in Axis Bank and then bought 980 put option. So I bought next month future, February future, around 1030, and then I bought 980 put option. So that means my maximum downside risk is about 50 rupees. That is 5%. The stock has already fallen 30%, so falling another 5%, who knows, it may fall, but that is a risk we have to take. But then I bought the 980 put option, but I had to pay about 13 rupees for buying that option. So I financed it by selling 1100 call option, but it was not a complete finance, but around I got around 7 rupees. So my risk reward, 50 rupees on the downside and 70 rupees on the upside. Right. So I'm expecting some kind of a short covering in Axis Bank. And also, as I told you yesterday, as per some news report, so this is margin trade funding, like leverage is being unwind. So that is the main reason why mid caps and small caps are fallen so much. So if you are a fan of mid cap and small cap, now it is time to buy slowly, but you don't go and buy in bulk. So do it some slow buying, and then you must be ready to average if Nifty comes to 22,500 to 22,600. So that is the worst case scenario setup. And not only that, yesterday what I did, I'm not expecting Nifty to cross 25,000 in the month of March. So what I did, I bought 23,500 put option, sold, double the quantity, 22,500 put option, and then I also sold 25,000 call. So that means, if the markets are bearish, I will make some money. A similar strategy, if you can remember, I posted few months before also. So maybe I will do it in my Twitter account, right? So these are the ways, one can manage, because I bought some mid-cap shares, the market may continue to fall. So therefore, I bought the 23,500 put option, right? The bought put option is financed by selling other options. So it's a very complicated, it's not that simple to explain. So that's why we conduct workshop, so 2 full days explaining all these things. So anyway, the markets will be volatile. We are not out of the woods. So at least, every day FAs are selling 3,000 crore, 5,000 crore, 8,000 crore. So at least let them start buying, So we are not at the, the trend is definitely not up, but at least, we can hope that the downside is limited from here. So I still feel that, of course, today is the expiry. So 23,000 to 23,500 is what we have been discussing. If the Nifty closes above 23,350, so that is the closing, the lowest closing on November 21. That day, actually, the very next day, the markets recovered, but now we are struggling to find the foot. So, positive sign will be today, third day market opening gap up, may close positive. I'm just assuming that market will be closing positive for third day. And then slowly, short sellers will start covering their shorts. And today, expiry day volatility will definitely be in there. So 23,000 to 23,500. So when the 23,500 is crossed, so that is when we can hope 24,000. So that all depends upon corporate results. But tomorrow the markets, like today and tomorrow, tomorrow opening will be volatile, but after that there will be no volatility. In fact, tomorrow I'm expecting volatility index to crash at least by 5%. So let us see what is going to happen. So in a nutshell, we are not out of the woods, but we are somewhere near the bottom. And if you want to invest in some good quality mid caps, so you can consider, investing slowly, bit by bit. Right? So maybe I may come out with some other video suggesting some mid caps. Right? So again, then definitely it is not an investment advice. Right? So this is like, just our opinion about some of the stocks. So definitely we are not allowed to recommend any stocks for you to buy. Right? So that's it for now. Hope you enjoyed watching this video. Thank you for watching.